I was working on my talk for the CNBC Investing Club last night, and it hit me like a bright bulb snapped on in a dark room. The real reason it is so hard for us to game all these tariffs is that the companies now being punished were doing exactly what companies were supposed to do, burrow deep into the host country and become indispensable to them. And for that, their businesses are being ravaged by the President of the United States, who has an agenda that has nothing to do with theirs and is often at very cross purposes to you, the shareholder. That's why the Dow plunged 700 points today. S&P plummeted 2.24%. NASDAQ nosedived 3.07%. Hundreds of billions of dollars were lost today on the same order of tariffs and the great Chinese tariff embargo. Let's think about the travails of one of my all-time favorite companies. Let's think about Nvidia. Here's a business that makes the best technology product the world has ever seen, run by one of the greatest visionaries of all time, not just our time, Jensen Huang. Nvidia's advanced chips are the key to everything from agentics and thinking bots to humanoid robots, self-driving cars. Its chips practically sell themselves and are at the heart of the new industrial revolution. Now, this is a company that makes our nation proud. No country wants to be left behind with the Industrial Revolution, particularly one based on AI, right? And no country like China wants to be left behind. For Nvidia, China's the best kind of customer they could possibly have. I'm sure that China would happily buy huge numbers of chips, and they'd probably buy all the chips. But what Nvidia didn't know was that it was selling its chips to an enemy nation. I don't blame them for not knowing, because nobody knew. At least nobody was operating under the rules of either President Biden or the previous president, President Trump. China was very open for business under those two. Sure, in his first term, President Trump was no friend to the People's Republic of China, but he wasn't a rabid hater either. Then again, China did grow more oppositional, although it's not like it was ever a secret that the PRC was an authoritarian dictatorship with global ambitions, sometimes antithetical to that of our own. Both parties now want to.
At a White House press conference on Monday, President Donald Trump attributed his trade policies with motivating Nvidia's enormous $500 billion pledge to construct artificial intelligence infrastructure in the United States. The reason they did it was due to the November 5 election and something called tariffs, Trump claimed while hosting El Salvador President Nayib Bukele. "I'd like to thank Jensen and everyone we've worked with. They are wonderful, smart people, and they would not be doing it without tariffs." The chipmaker revealed plans to collaborate with manufacturing giants such as Foxconn, Wistron, TSMC, Amkor, and Spill to establish AI-related infrastructure across the United States over the next 4 years. Nvidia's Blackwell chips are already in production at TSMC's Phoenix factory, with assembly operations scheduled for Texas. Nvidia CEO Jensen Huang announced that the engines of the world's AI infrastructure are being created in the United States for the first time. Adding American manufacturing enables us to better meet the incredible and growing demand for AI chips and supercomputers. The action comes after President Trump delayed tariffs on countries that have not levied reciprocal trade penalties for 90 days last week, providing temporary reprieve to U.S. chip firms. However, Trump stated on Sunday that he would unveil new semiconductor import duty rates this week, with some flexibility for particular companies. Nvidia's approach aligns with similar moves by competitors. Advanced Micro Devices CEO Lisa Su stated on Tuesday that the company will manufacture more AI servers in the United States and start chip production at TSMC's Arizona facility. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Nvidia sinking after the chip maker disclosed that it would take a $5.5 billion hit from the U.S. government's surprise new controls on its semiconductor exports to China. For more on the latest, let's welcome now Daniel Newman, Futurum CEO. Daniel, it is great to see you here on set. Appreciate it, from Texas. Before Jay Powell, frankly, this was the story of the day. It was chips. It was Nvidia. Nvidia is down here, Dan. It's down about 10%. It's getting clobbered in today's trade. I guess two questions to start. One, Dan, were you surprised by that news when you saw those headlines? And two, do you think down 10%. Is that move justified in your opinion?
Yeah, first of all, nobody should have been surprised by this move. Really, the administration's been giving this signal that it was going to clamp down. Now, what was interesting is this week there was a bit of gyration because they cut this deal. They announced $500 billion of AI supercomputers being built here in the United States. And then a day later, he pulls back on this new export licensing requirement.
Well, to bring that in, that is an interesting point because there were some folks who thought Jensen Huang was going to be kind of shielded from this.
Yeah, he
right?
made a deal. I had a few reporters actually hit me up. Do you think there was some tit for tat going on? And first of all, I think President Trump needs to show that there is no tit for tat. So whether it's, Tim Cook bringing more manufacturing here, whether it's TSMC coming here. But I actually think on the other side of this, and maybe we come back to this, is that I actually think creating some certainty with the community, the business community, about what type of benefit they can expect by onshoring and bringing manufacturing back here, I think that would be a great start. Having said that, national security, economic security, and AI are tightly correlated. Us giving the chips to China, whether it's the tuned down chips or the best chips coming through intermediaries, which they shouldn't be getting, this is something that's giving and advantaging China. There's a lot of people out there that are like, oh, well, this is going to only push their resolve. Do you think China's waiting because we're sending NVIDIA chips? They're not investing in Huawei and building their own chips. You can be absolutely certain that they are. This war, this trade war, is largely being fought on the grounds of long-term economic domination. Long-term economic domination will only be had if we control the technology trade. NVIDIA is at the forefront of that trade.
And what do you think from an investor standpoint? Here you have Nvidia falling yet again, 8 to 10%. Look what happened over the last couple of days. It had recovered from its lows, right? And a lot of investors who got in short term experienced that bounce. Where do you think that looks like this week?
I look at that line of people around the corner at $150 that just couldn't wait to buy.
Right.
And you go, what has really changed? Well, first of all, you've got GPUs melting over at X and at OpenAI. There's so much demand there. Could NVIDIA pivot some of its capacity, not focus so much on building specialized products for China, and make sure we meet all the capacity and demand that's out there for companies that are in the US that are trying to build? You've got $325 billion of CapEx. And it's been reiterated. So whether it's been Sundar Pichai, whether it's been Satya Nadella, they're all planning to spend. And I genuinely believe, Sylvia, that the companies with the big operating leverage are going to look at this pullback as the moment to build AI infrastructure out. Because when we come out of this, and we will come out of this, there will be deals made. Calling that on the record right now. It may be a tough couple of months. When deals are made, we will see the economy accelerate. And those companies want to build the future and have that AI infrastructure in place. So the Googles and the Microsofts and the Amazons, they're going to buy NVIDIA. And one other thing, if I may, I find it very interesting that everybody thinks that China and their push to build Huawei is going to be so successful. When AMD came out with a competitive product, no one believed they could build the software. Broadcom's making chips for the hyperscalers, and everyone said, well, that's great, but they don't have CUDA, so it's not going to work as well. But suddenly, everybody believes that China and Huawei is going to build the CUDA competitive product that's going to undo NVIDIA. I believe in China. I believe in their resolve. I don't believe that they have as much competition or much competitive capability today as people are suggesting.
The stock market fell substantially again on Wednesday, with all major indices closing in the negative, as investor morale was affected by Federal Chairman Jerome Powell's pessimistic comments on the U.S. economy, which stated that the U.S.'s trade policies could drive up inflation and push us farther away from our goals. The Nasdaq, which is heavily weighted in technology, fell the most, down 3.07%. The S&P 500 declined by 2.24%, and the Dow Jones was down by 1.73%. Chipmaker Nvidia fell 6.87% on Wednesday to settle at $104.49 a share, as investors sold their positions following announcements that it would face a $5.5 billion financial hit from the U.S.'s new limits on the export of its artificial intelligence chips to China. Nvidia plummeted more than 10% during intraday trading before purchasing positions pulled the stock price marginally higher. In a regulatory filing, Nvidia noted that on April 9th, the U.S. government informed it that a license will be required to export H20 graphics processing units to China, Hong Kong, Macau, and D5 countries, among others. The USG stated that the licensing requirement tackles the danger that the covered products will be used or diverted to a Chinese supercomputer. On April 14, 2025, the USG informed NVIDIA that the licensing requirement would be in effect indefinitely. The company's first quarter of fiscal year 2026 will finish on April 27, 2025. The first quarter results are expected to include up to $5.5 billion in costs for H20 goods inventories, procurement commitments, and related reserves, the company claimed. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
NVIDIA's H20 chips, Dan, if they can't go to China, can they go someplace else? Or is it that, no, this is a product Jensen engineered for China, so if not China, loss?
Well, that's why they're taking the charge back. Now, a lot of people are calling it a fine, and I think it's very important that we get that on the record. It's not a fine, but they've manufactured, have a certain amount of capacity. They do not believe they'll be able to sell because OpenAI, Meta, Google, they want Blackwell. They want the next chip. Even Jensen himself on stage at, most recently at GTC kind of said, Hopper isn't even needed that much anymore. And they were like, don't say that. But because Blackwell is so much more powerful on a token, performance basis, on a tokens per watt and dollars. Having said that, for some of these instances, for enterprises, smaller use cases, tier 2 clouds that are just trying to get more inference, I'm surprised they're not trying to figure out if there's a buyer.
If American companies like Nvidia and AMD can't export to China, you kind of hinted at this, but I want to double tap on it. Who picks that up? Who picks that business up? Is it the Huawei's? Is it homegrown local Chinese companies?
Well, as of right now,
benefits?
Yeah, as of right now, it feels like the beneficiary is going to be Chinese companies. But the real question is whether it's been China developing BYD EVs to eventually displace Tesla. And trust me, they want to do that. Or building these great Honor and Oppo phones using Android to eventually make Apple less critical. Over time, I don't see any situation in which China was going to be like, sure, we're just going to build all of our infrastructure out on Nvidia and hope that, there's never any sort of trade conflict in the future. We all know that AI is the forefront of the economic battle of the next 2-3 decades. They have to build their independence. We have to use some protectionism mechanisms to make sure, because we know they're already getting the chips other ways as well. The DeepSeek thing, that was a complete abomination of the truth. It wasn't some tens of millions. They spent billions on Hopper chips, but they pretended like they only used a low amount of chips. They're trying to compete with us. I'm not suggesting protectionism is the long-term strategy. I think innovation wins. Near term, though, we want to build as many generations of advantage in our AI as possible because you can be absolutely sure they're gunning for us.
As a chip, let's say I'm a chip investor. I'm listening to this, Dan. I'm thinking, okay, I want to pick my spots. Dan says, what about that? Should I be exposed to those chip giants that have the big data center exposure? Do I want the chip names that have the consumer exposure, smartphones, PCs, autos, mix of the two?
Absolutely not the latter. Right now with the tariff situation,
forget the latter.
Potential recessionary forces, you just heard from Fed Chair Jerome Powell. I'm worried about consumer discretionary. I'm worried about tariffs making those things even more expensive. So things like cars and phones. Sure, the higher class, wealthier people will keep buying, but I am more worried about that. I really like the enterprise AI play. So
that's who, Dan?
While I do think there's a bit of a pause on the Nvidia buy, like I said, all the hyperscalers that have limited exposure, but of even them, I like Microsoft the most. Almost all enterprise business, very little consumer exposure, very little ad exposure, because that kind of middle brigade of the ad group, the Meta, Amazon, and Google all have big ad exposure, which if small business gets hurt and consumer gets hurt, they will see a bit of a pullback. Microsoft has very little of that. I also like some of the enterprise applications that are going big. So I've spent a lot of time with Bill McDermott at ServiceNow. I think what he's doing with agents is very powerful. I think those companies that are building agentic workflows, because enterprises, CEOs I'm talking to are basically going to look at a downturn and they're going to say, how do I replace human capital, big expansion and CapEx with operational efficiency? Guess what? Agentic AI, the ability to replace, displace, augment, and grow your workflows and processes and people with very little input cost, that's going to be a big buy. It happened in 22 during QT. Companies went big on tech. It's very deflationary. I think if we go into a recession, we'll see a very similar action from enterprises today.
And what do you think about quantum computing and the role of chips in that and the opportunities for investors to get in there for the longer term?
So one of my dear friends, Niccolo De Masi, INQ CEO, I'm a big fan of what the company is doing. I think longer term, again, it's kind of like, are you an investor, or are you a trader? You know, some of these names like INQ have had this incredible movement up and down. There's a ton of interest in quantum. We're just starting to see use cases and dollars flow in. But right now, if I'm getting, if I'm trying to position myself, if I'm thinking in the investor's language, I'm thinking who are companies that have revenue now, who have stable margins right now, who are going to be in demand. That's why I like the enterprise. I like AI because it's a right now thing that companies can invest in. And I'm staying away from anything that could be pushed to the future, but I'm actually very bullish on quantum as an augmenter to go work alongside of our classical computing.
Dan, final question. I asked the same question to our mutual friend Corey Johnson this week. There has been this chatter out there, and I want to get your take on this, including from some very smart people who say that mega AI trade and trend has cooled. They'll say DeepSeek changed the narrative. They'll say NVIDIA's best days are behind it. To that you say what, Dan? NVIDIA's
trading on a forward earnings basis of its value a few years ago before any of this AI was even in play. I just don't buy it. I don't buy that AI is not a mega trend for the long term. I'm an investor though. I'm not a trader. I'm not looking at these things on short term. If you're playing the short term gyrations, if you're playing every time Fed Chair Powell gets on the mic, you may see some pullback because there's a white space between this CapEx build out, these kind of Chinese ghost cities that are only generating handfuls of billions while we're spending hundreds. But in the next 5 years, the diffusion will be much faster. This is not another internet boom. So if you believe long term, you follow the trends, but I would start in the enterprise because the enterprise has more operating leverage than the consumer. As we come out of it, some of the potential of things like the next generations of PCs and phones, the cars of the future, it's very exciting stuff. I think there's an opportunity to wait and see a little more there. Buy into the enterprise. They're going to want to get efficient. They're going to want to get fast, and they're going to want to figure out how to grow through these uncertain times.
Nvidia is a computational infrastructure firm. The company's compute and networking sector consists mostly of data center computing platforms and end-to-end networking products. The key offerings in its graphics business include GeForce GPUs for gaming and PCs, the GeForce Now game streaming service, and related infrastructure. The company's data center division is critical to its growth, increasing by 93% year-on-year in FQ4 2025 and doubling year-on-year for the entire fiscal year 2025. This growth was fueled by the fast-rising need for AI infrastructure. Major cloud providers generate 50% of the company's entire revenue. However, following advances such as DeepSeek, these providers are now seeking for more cost-effective alternatives and attempting to minimize their dependency on Nvidia. As a result, the company's sales growth target for the first quarter of 2026 is 9.4% sequentially, down from the previous 12%. At the same time, new U.S. AI diffusion rules have been implemented. These laws seek to restrict the global circulation of advanced AI chips and other technology, allowing the proliferation of powerful AI to be controlled. However, Bank of America retained its buy recommendation on the stock, with a March 28th price objective of $200. This is because large CSPs like Azure, GCP, AWS, and OCI use the company's Blackwell systems to satisfy their increasing infrastructure demands. Dan Ives, managing director at Wedbush Securities, analyzes the status of the tech sector in light of U.S. President Donald Trump's tariff announcements. Speaking on an interview, Ives stated that tariffs in their existing shape are untenable. He also says that separating U.S. technology from the Chinese market is impossible. For the first time in 30 years, U.S. technology is ahead of China, and what you're essentially doing with these tariffs is cutting U.S. tech's knees and sending it back years, Ives explained in an interview. Nvidia CEO Jensen Huang said on Thursday that China was a critical market for the company after the United States banned the sale of its H20 artificial intelligence chips in the country. "We wish to continue working with China," Huang said during a meeting with Ren Hongbin, chairman of the China Council for the Promotion of International Trade, according to China's public broadcaster CCTV. Huang had been to Beijing earlier that day at the invitation of the Trade Association. His visit coincides with new limits imposed by the United States on shipments of Nvidia's H20 data center GPUs, the only compatible AI chip the company can legally sell in China. The U.S. prohibition has caused uncertainty for Chinese internet companies, who had expected H20 delivery by the end of the year. Nvidia did not immediately reply to a request for comment on Huang's plans in China. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Let's get to the big stock stories of the day. Nvidia and AMD shares sliding, both warning about big charges related to export restrictions. Christina Partsinevelos has the latest. Christina.
Well, it's been quite the policy reversal, Leslie. Nvidia announced Tuesday it faces, like you said, $5.5 billion charge after the U.S. government imposed new export restrictions on its H20 AI chips that are made specifically for China. The charge will be taken in Q1, and it'll cover H20 inventory and purchase commitments, as well as some related reserves, but comes just over a week. I remember reporting this 2 Fridays ago after CEO Jensen Huang reportedly secured a reprieve during a high-profile dinner at Mar-a-Lago. The licensing requirements, though, are set to remain for the indefinite future and come despite NVIDIA's announcement just on Monday about plans to invest $500 billion in U.S.-based AI infrastructure. Well, there's the art of the deal. While significant, the impact may be contained, though. China accounted for approximately $17 billion in NVIDIA's fiscal 2025 revenue, representing just 13% of total revenue, which is the smallest percentage in over a decade. But based off of a lot of sell-side research this morning, they are expecting an impact to Q1 EPS, which is why you're seeing the stock fall about 6%. AMD also said it would take an $800 million charge in the quarter, and this is in a filing today. AMD said it will seek licenses to export to customers in China, but cannot be sure of securing them. That's because these licenses could take up to 6 or 12 months to actually procure. But a bigger threat looms. Potential AI diffusion rules could take effect in May. These would limit NVIDIA as well as AMD sales to many more countries and customers. So this regulatory whiplash really highlights the unpredictable nature of tech trade policy under the Trump administration, where even personal appeals at million-dollar dinners don't offer guarantees. Carl?
Christina, yeah.
Or David.
No. I just had a question quickly. I mean, you kind of answered it. The licenses. I mean, there seems to be an expectation in the marketplace they're not going to get the licenses, even though it's not being deemed blocking entirely the sales. That seems to be the way the market seems to be thinking about it.
If you were to take the CHIPS Act and how long that takes to disperse and all the people involved, I know it's not exactly the same people under the Trump administration, but just think of all the paperwork they have to go through, figuring out where the supply chain and then providing them with the license. So that is the assumption that it could take up to a year to even get. And then the chips would be obsolete to a certain degree.
That's true. Innovating so quickly. Still commerce. Still the commerce.
Morgan Stanley analysts reduced their revenue expectations for Nvidia on Wednesday, citing concerns that new chip export limitations to China will be more disruptive than expected. Nvidia said on Tuesday that it expects to take a $5.5 billion charge in the fiscal first quarter after the U.S. government informed the chipmaker that it would require an export license to sell its H20 chips in China. Analysts believe the write-down indicates that the company is not hopeful about being given a license, and that such restrictions may have a long-term impact on Nvidia's business. Morgan Stanley analysts reduced their revenue expectations for Nvidia on Wednesday, citing concerns that new chip export limitations to China may be more disruptive than expected. Analysts expect that Nvidia's data center revenues will decline by 8% to 9% in the next quarters, after the U.S. government warned the chipmaker that it would need a federal export license to sell its H20 processors to China. The H20 is less powerful than Nvidia's most recent chips and was designed to meet export constraints for the Chinese market. Nvidia announced Tuesday that it plans to incur a $5.5 billion charge in its fiscal first quarter as a result of the government's decision, which suggests that the company is not optimistic about being granted licenses, according to Morgan Stanley. The analysts estimated that the H20 chip accounted for 12% to 13% of Nvidia's data center revenue in April. Nvidia shares fell over 7% to settle at $104.49 on Wednesday, leading other semiconductor and tech stocks lower amid concerns that tighter export curbs will have far-reaching consequences. The discovery comes as the federal government intensifies its probe of Nvidia's ties with Chinese AI startup DeepSeek. The House Select Committee on the Chinese Communist Party wrote to Nvidia on Wednesday, expressing concern that DeepSeek used limited Nvidia chips to construct its AI models, which the Chinese company claims can compete with American companies at a lower cost. The United States government directs American businesses on what they may and cannot sell, and we strictly adhere to those instructions, Nvidia stated in an interview. DeepSeek's quick growth heightens the tension in this high-stakes poker game, according to Wedbush analysts, who also note that Nvidia's AI leadership makes it a significant chip on the table for Trump. Despite concerns about the new export limitations, Morgan Stanley maintains Nvidia's stock as a top pick, citing the chipmaker's potential to gain from rising demand for AI hardware. Bank of America also reiterated a $160 price target, calling the chipmaker's stock compelling given robust worldwide demand for Nvidia products. Jefferies and UBS were even more positive, confirming their target of $185.